If you follow this podcast, you will know that many years ago I bought gold as a hedge against what I foresaw as a huge increase in inflation. I was right, and currently gold is hitting all-time high, passing more than $2,100 per ounce. My investment is up more than 35%, but that only actually covers the inflation here in Eastern Europe, which has been raging for the last few years. But from this point on, I expect to actually profit from my investment into gold, meaning that I will make more money than the inflation itself. Gold is ticking upwards to 2,500. That was my bet all along, and now it is moving faster than ever, mainly because the market expect interest rates to go down next year and China keep buying gold in huge piles. That story is a much longer story. We'll not delve about that story in this podcast, but it's related to BRIC, it's related to yuan, it's related to oil moving away from the petrodollar, making gold very interesting. Silver is an absolutely interesting item as well, much cheaper than gold, and you can easily buy physical silver and keep it at your home, either as coins or bars. And it follows gold strongly, but a bit more volatile. We are heading into week 49. You're listening to the StockInvest.us podcast, Trading Tips with Jim. And last week, Nasdaq again managed to push in green, ending the week at 14,305 points after being up almost 0.4%. Nasdaq keep pushing. It's overbought as I ever see in Nasdaq, but it keeps pushing. It's good in one sense because it's building up support below, but it is defying all natural laws. Nasdaq should have had a correction as is. Doesn't have to be that big, but it should have been. Now it just keep pushing, reminding us how markets can move when they are overbought and when they are oversold. When they're oversold, they can continue downwards for a long time. When they're overbought, they can just keep continuing upwards. Something Nasdaq currently is doing. But every expert out there agrees that the market is really heated as we speak. This week, tons of economic data will come out, and some of it may affect Nasdaq. And it's mainly the Fed talk. Fed will have meeting in not this week, but next week. I think it's the 13th. Wednesday the 13th, but already now we will start to get small signals. Fed talked last week and said that we shouldn't be too sure about rate cuts yet, or not increasing the interest rates, because everyone is betting that the interest rates will go down in 2024, and that on the next Fed meeting, it will remain unchanged. If interest rates is being hiked up, it should hit the market hard. And the market is paying attention to all and everything that can give a slight indication of what Fed and Powell will do. And a lot of eyes is poked at working numbers, so they are the big thing. Is the labor market getting a little softer, not pushing as hard? We know that the job market's been extremely good, holding up salaries, holding up the buying power, but lately showing signs of cooling off. And this week there will be monthly job numbers. They are expected to come in, the unemployment rate is expected to come in at 3.9%, unchanged from last month. So that's one of the first numbers that you will get. On tomorrow you will have the job opening numbers, and they are expected to have a slight decline, down from some 9.5 to 9.3 million. It will continue on Thursday, where you will have the jobless job claims number, and they are expected to increase from 280,000 to 221,000 from last week. So these are numbers that and a few other things. You will have Factory orders, durable goods numbers will come today, but they shouldn't be enough to move the market too hard. The eyes will be pointed, as I said, in these inflation-related numbers, because they will decide what Fed does. We're getting to the end of the year, and very, very often historically, the end of the year is good. So Nasdaq may still continue on a hard rally. Dow Jones did much better than Nasdaq last week, up 2.42% for Dow Jones, ending the week at 36,245 points. Besides job numbers and other inflation numbers, there is still a lot of quarter results coming out this week, and many of these will for sure affect the individual stock. Some of them have the potential to push even the market a little bit. A lot of eyes will be on how they are doing. And before telling you a few of the companies that will have quarter results this week, I saw on our Discord channel someone talking a little bit about how they missed on the bet for the quarter results, because you can put your bet on quarter results, because usually stocks move very fast up and down. And then I will just remind you that if you go to stockinvest.us, type in your ticker, you will have we have made an overview of how the stock moves before, during and after quarter results. Some follow a very, very common pattern, and you can trade on this. And there is other information you can use. In general, it is a way to absolutely make money, but you should know that, for instance, if you put on a stop loss and you think that you are safe, stocks after quarter results, because they usually come before market open or after market is closed, can cause a huge difference on the opening. This week, NEO, for instance, will have quarter results tomorrow, and if they are bad, NEO may open far below your stop loss, and it will not work. Seen this many times, stock having terrible quarter results, opening up down 20% happens all the time. And in a few cases you have the opposite, where they open extremely strong up. That's the name of playing quarter results. Some of the quarter results and companies coming out this week is actually many of these companies that grew hard during COVID period, like GitLab will be today. Asan will come tomorrow, and I think I saw on Thursday we'll have DocuSign. These companies, they made so good money acquiring tons and tons of customers during COVID, but we can see they are slowly starting to fade off as customers are saving money. Subscriptions are going down, subscription prices are going up, but the amount of subscribers are going down. People are starting to save more and more, and these services was excellent when you didn't have to go to your office, but losing some of their validity as more and more people are heading back to offices, starting to become a policy again. Tomorrow will be followed also by AutoZone, JM Smucker, and as I said, you will have the numbers for NEO. Personally, I'm invested into NEO. So far it's not been the best journey of all, and I'm not very confident that it will be the best day for NEO tomorrow either. But as Warren Buffett says, that sometimes you have to endure. If you believe in something strong, you have to be expecting a downturn as a part of the investment. The smart one will just, of course, do the opposite, sell and rebuy more later. I am stuck in a solid NEO position, was quite heavily in plus, currently sitting with some losses. The reasons why I believe in NEO is because I believe in the EV market, but you should know that the resistance against EV is growing all over. This has to do with the decline in economies. Several economies are in recession. Everyone is expecting that the US also will be in a recession. Actually, US was one of the few countries changing definition of recession, because normally, and everywhere else, for sure in Europe, 2 quarters of declining GDPs, and you consider it to be a recession. Now, the question is, how big will it be? But most are expecting for a mild recession in US in 2024. I wish we could speak a lot more about these things, because there is one thing that you see on the papers and another thing is what you see actually. And if you ask about recessions, so Fed says there will be no recession, but I saw a survey where I think it was 88% of all the major CEOs, and they should know, the CEOs of the major companies, they should know the how things looks based, because they have total control over all their numbers, how their organization is doing, how the sales, the revenues and the profits are doing, and 88% of them says that they believe it will be a recession. Now you may think, so should I just leave, get out of the stock market? You have to remember, and I pointed this out several times in the podcast, that the stock market is long before the economic market. A lot of these things are already discounted into the prices, and for sure for many companies. You have to remember that most of the gains this year in the markets is not driven by the average stock. It's driven by Magnificent 7 stocks, the big 7 stocks, and most other stocks actually had a bad year. So there is a lot discounted into the price of these companies, and that is why, for instance, I slowly is moving over to companies that hasn't performed as good this year, as I see them as more safer. If market will take a small dive, I think they will fall less, and they will have a huger and a greater upside than some of these stocks who now are up 300-400% over the year. But market, as I said, a lot of these things are priced in, and a lot of these things are of course priced into the PE number. So we have to see how they develop, because they tell a little bit how much overbought the market is. But for many stocks, just to end that on that note, for many stocks, I believe recession and bad times are way discounted into the price. And I think they will do very good up. One company I keep mentioning, which hasn't done very well, is America, but they keep posting better and better quarter results. Stock is not moving at all. Interesting cases indeed. So a lot of quarter results coming out this week. Some of them will of course affect the market. GameStop, who maybe everyone's remember from the big meme 2 years ago, will have on Wednesday. GameStop been moving quite much lately, together with ChargePoint, another EV thing. And about that EV, so we don't put any loose ends here. The future, what I wanted to say is that more because of economic downturn, more and more are turning away from EV, because it is not as profitable yet. It's a high cost, and especially when electric cost, energy cost been sky high, so a lot of the incentives for EV has fallen away. If you go to countries like Norway, in the beginning you had super cheap electricity, toll booths were free, you could drive in the bus lane, there was so many perks related to EV stimulus. And now they're being cut one by one because the economy is not good enough to support all this. By the way, Norway is still high up on countries buying electric vehicles, but even in United States you see lots and lots of resistance against this governmental push for EV. So this push is coming. EV has faded a little bit away. You love your gasoline or diesel car, driving without concerns of running out of electricity because range, etc. has been very short on EVs. But these things are being solved as we speak. I see longer and longer battery ranges, and the future will be green. But it might be years before we are back on the EV train. My bet is that we will be earlier on, but in the future I cannot see how we will sustain running on fueled cars. Maybe hydrogen, who knows, but for sure diesel and fossil fuel should have diminish in scale. It should go down. EV should take much more of the market, and the question is which one of these companies will be the best. We know that the major companies, GM and these other car manufacturers, they have tried but are not making money on their EVs yet, and some of them even scaled back, leaving room still for Tesla, NIO and a few others, but the future may hold other names. The thing is, I still believe electric vehicles will be the future. Batteries are getting better, everything is getting better, and it is more or less a question about timing. I might have to sit and wait this one out. Thursday, as I said, DocuSign will have quarter results, then Robinhood, another popular company, and Dollar General. Looking at buy and sell signals, because the question is how will this week move, and if you're a new listener you should know that for I think we're heading into the fourth week where I've been wrong, because I'm expecting a correction at Nasdaq and Nasdaq been just pushing upwards. I was on a very long streak being correct, and when Nasdaq got way overbought, my bet was that Nasdaq should have a reaction down. But Nasdaq, as I said, managed 0.38% plus last week. I might be wrong again this week. We'll see. In a few minutes you'll know exactly what I think will happen this week. Back to the signals across all stocks that we analyzed. 39% has buy signals, and these are starting to become very high numbers. 44% of the stocks at Nasdaq has buy signals. The last time we had a somewhat, not crack, but very huge fall, very fast and huge falls over a few days. Nasdaq hit 47. But if we go to New York Stock Exchange, 55% of the companies are showing buy signals. It is way too high, but you have to know this. When things are overbought, they can continue. Nasdaq can easily rally to 16,000 points. I've seen all of this before. I'm just telling you that naturally there should be a correction down. And one of the ways that I play this game is that I make sure that I'm not overexposed. I want to be in if market continues down, but if it takes a fall, and now right now I would say the risk ratio is not on the buying side. There is a higher chance of a fall than continuous upturns. So that means that I will be a little bit how I plan my things, where I set my stop losses and how much I'm exposed to the markets. I balance this much differently, but than when markets is oversold, and I usually have higher exposure, trying to get bigger growth. New York Stock Exchange, as I said, 55% buy signals, up from 36% last week. London 32%. Tokyo actually fell a little from 25 to 22, while Shenzhen China was up from 34 to 37. All these numbers are on the higher end, and I had a look at the Nasdaq chart before starting the podcast, showing overbought, but with good support below. And this was the one thing I mentioned a few podcasts back. If we are lucky, we will have Nasdaq moving sideways, building up support below. When the correction comes, it will not be too deep, and we can have a fantastic end of the year. I hope I'm wrong, but again, I will bet for a fall in the market that Nasdaq will be lower by the end of the week than the start of the week. I have a hard time to see things continue to push hard upwards, but you never know, and you shouldn't take my word for it. Use more sources than me. As I said, been around 4 weeks in a row after a long streak of being correct. You may ask, so how did your trades go, Jim, during these weeks where you were wrong? Well, I was not able to really take advantage of the upturn in the market. But in general, my stocks follow the market upwards and even more so. The only portfolio which hasn't moved very well is oil. And maybe, as you know, oil was up around 85, now been trading under 80, currently sitting at $74 after being down $1. My oil portfolio hasn't moved as I hoped during this period, but it hasn't lost as much either. The thing is that oil, there is so much going on oil, so I might have to think about repositioning my oil portfolio, but I will not do it yet. It hasn't, as I said, performed as well. But when market go up, my exposure is such that in most cases I go up as well. And last week I told you that Foot Locker, I have Foot Locker, I bought Foot Locker quite cheap. And if you followed what happened to Foot Locker, had an amazing strong week. Last week was up, I think, 25% in a single day last week. So Foot Locker made me quite nice green pile of profit, meaning that I can stand the loss if that will be the case during the week. Gold, as I mentioned over and over again, keep pushing upwards, and I am exposed to gold. I will continue to be exposed to gold, and I believe gold will be at $2,500 sooner rather than later. And many of you might be tired because I've been speaking for gold so long, but the main topic here is it was the right choice. It was indeed the right choice. It hasn't moved too much, but it was the right choice. And as I told you, I didn't want to be too exposed in the market because the market is way too volatile. There was still way too much geopolitical things happening. I didn't want to sit fully exposed in the market just to wake up, full-blown war with Iran, stock markets crashing like crazy. I didn't want to be in that position. I wanted to be in a position where I can handle and utilize when big opportunities come. And right now there is, as I see it, no strong opportunities in the markets. There is a lot of pick-up opportunities, but the market is, in my opinion, a little overbought. So there is no guarantee if you put in money. These were the situation when COVID hit, or some of these major falls, where I say that now market is oversold. The buy signals is way too low. You can just put in because here it will turn. And as you notice, they turned over and over again. We might miss the bottom sometimes, we might miss the top sometimes, but we keep doing okay. And sometimes not being the absolutely best is totally fine, because the very best very often also take the hugest losses. That's a little bit about investing. Now, I bet for a red market this week. Doesn't have to be by much, by the way. Like last week I said, doesn't have to be by much, but my guess is that market will have a tougher week this week. Now, before we go to the $1,000 challenge and the end of the podcast, I just want to share a little bit with you about dividend. I've been looking quite much into dividend lately, simply because it's extremely popular, but I also wanted to try to figure out which companies are the best choices for dividend. And you have to look at different things, not only what they paid out this year, because that will make your list look very, very strange. You have companies that have either been bought up or gone bankrupt to do a one-time huge dividend, and then of course show up as huge dividends. Signature Bank was one of them. So looking at this, trying to make algorithms to find which stocks are the best places stocks or ETFs are the best places to invest for a more secure dividend, looking a little bit about how much money are they making, how are their revenues, the profit margins moving, because that will give you an idea about how things move forward. By the way, doing this algorithm on Boeing, company like Boeing, so Boeing my algorithm shows that Boeing have a high chance of getting back to dividends again after not paying dividends for the last 2-3 years. Very interesting and very nice to see, and mainly based on Boeing doing quite much better, Boeing being a good case indeed, just not only as dividend but also as stock. Quick roundup here, just mention a few companies at New York Stock Exchange, Nasdaq, and a few for you Norwegian followers. In US, Gladstone Investments been found as one company that do very good on dividends so far, paid 17.6% dividend this year. Last year was 7.5% dividend, and having good books. AGN Investment Corps, of course, many of these are investment corps or similar, is another one, up 12.6% dividend this year and paid 9.32% last year. And your Oxford Square Capital, Prospect Capital Corps, many of these are paying solid dividends. If you look how they pay, many of them pay monthly dividends. Horizon Nasdaq 100 is another of these, 11.8% dividend so far this year. Last year 9.82, currently paying 16.7 cents every single month in dividend. These are stock at New York Stock Exchange. Nasdaq and New York Stock Exchange are many of the same types of companies. I mean that they are either income funds or anything, but PIMCO Dynamic Income Fund have paid 12.9% this year. Last year was 12.6%. Steady monthly income. You may wonder, where can I find this list? You can go to getagraph.com, my site where I develop things which later will be integrated into Stock Invest if we find them good enough. There you will find the ultimate dividend list where I list the companies and I give them a score and a ranking as well, trying to rank them in the order of most safe. Orchid Iceland Capital is another one, 15.17%, 70% dividend so far this year. Last year 10.6%. We see this, that the best ones, they have upwards to 20% dividend, meaning companies that doesn't just do one singular dividend payment but keep paying year after year. So they are up there 15-20%, which is a strong return. Some of the reason why I mention this is because maybe if you keep losing money month after month, year after year on stock trading, and maybe you start to realize that you are not cut and carved for trading, there is many other ways to invest your money for growth, and dividend is one of them. One very good way to utilize dividend is do monthly payments into dividend paying funds. And if you're lucky, have a dividend that pays 20% every year. If you're that lucky, most of you should expect 10%. Your money doubles quite fast. But before going to the $1,000 challenge, let's just have a quick look at Oslo Stock Exchange. So which companies have my system rated as the best? On the top is American Shipping Company, paying 66% dividend this year. Last year was 14%, and the books looks very good. A bit odd case there. On the second company is an energy company, Vår Energi AS, paying 13.6% so far. Last year was 11.10%, and the revenues, the financials are looking very good, meaning that the system expect also dividends to keep being paid. Then you have OKEA, Sparebanken Sør, that's a bank, saving bank Sør, is another one. Even though it only paid 4.55% so far this year, it's a steady payer. Last year was 5.5%. In general, I can tell you that my system tells that dividends will not be as lucrative next year as we move forward. A lot of things happening in the books, and that is why you should keep your eye on quarter results are showing less and less profit margins, and this is again some of the reason why 88% of the major CEOs in the major companies thinks a recession is coming and that it will be harder than most people think. Now you've been waiting 30 minutes for the $1,000 challenge, and it's going 2 weeks back. I bought Teekay. I wanted to be somewhat safe, so upside in oil, but oil being battling and not really doing anything. Bought Teekay at 704, currently sitting at 705. I was up in somewhat okay profit, didn't take it then. Currently only 0.14% profit. I told you that I want to end this year, because we are sitting now like 14-15% profit in total on the $1,000 challenge that I started this fall, not doing more than the market, been playing a little bit too safe, and I want to double the money before Christmas if I can. And I told you I will take more risk in the last few weeks ahead of us. I'm going to change out Teekay. I will sell Teekay today. Go into a new stock and see if I can do something there. By the way, Teekay, I believe Teekay will do very good over the next 5 weeks. So if you wonder why I will go out of Teekay, well, this is a challenge where I aim to grow as fast as I can, and I will have to try to do it. It's, for me, just for fun. This someone I easily can lose, wouldn't think twice about it. But if this is a huge part of your investment, you should think 2, 3, 4 times before following my tips, because now we are getting into more and more risk. Repare Therapeutics is the stock I want to try this week. And this may be a gamble. I'm gambling that the support below will hold, that it might push upwards to 7. It's currently sitting at 532. It smells indeed, knowing that there is a fair chance that market will be bad this week. It smells a little bit too risky, but if I might be wrong this week, I think maybe it should be able to push upwards. Looking at the chart, this stock can easily fall to 450. It can easy fall 20% in a single day. Do not think that this will just be straight to heaven, because this can easily fall back that way. At the same time, on the upside, it is very little resistance above it. Some resistance around 550. But after that, it should be clear path up to 7, even $8. That's what I'm gambling on. That the huge buy signals from the relation between the short and the long-term moving average will hold. The volume formation, I like it somewhat. The volume fell on the last trading day. The stock remains somewhat unchanged, meaning that if we get back to a little bit of volume, I think the stock should push upwards. The ticker is RPTX, Repare Therapeutics Inc. stocks. What I will do, I will sell TK when the market's open. I will try to get Repare Therapeutics as cheap as I can. Currently ranked as a hold candidate at stockinvest.us. Totally agree to this evaluation. There is not a clear buy, it's not a clear sell. This is one of the cases that maybe will be. I looked at much better stocks indeed, but only showing upsides of 5 to 10%, and in just a few weeks I want to do much more than that to see if we can have a grand final of the year and do the things that we set forth a few months back when I started this portfolio. That's all for today. I hope you got something out of the podcast. Thank you to all listeners, you at Spotify and you at YouTube. Remember, the YouTube version is where I will post the comments, what price I will sell and what price I would buy, so you can see for yourself that these trades are real. I will show you some results a bit later actually of how it is doing, but in general we've only been following the market, hardly making anything more than in general. Had a few good trades, then we had a few slow trades. Now we have to gear up. I hope I will not be too wrong about this week's trade in Repare Therapeutics. I wish for you the absolutely best week that you can have, that when you hopefully will be back next week, your portfolio is much greener than it was before the start of the week. Expect a bit jumpy week with quarter results, a lot of economic numbers, but it just makes for better trading opportunities. Until next week, have the best of the week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.